Hello, fellow traders. 'Tis I, the Rumpled One. Let's talk about position size. I'm sure you've seen the equation: position size equals risk divided by stop loss, where most of the time traders believe that you shouldn't risk more than 2% of your account. Some people think it should be 1%. Some people think it should be 0.5%. So on any one trade, the most you can lose is that risk amount. Now, what happens to a lot of traders is when they run this equation, they'll get a position size. So when they put the trade on, they always use the same position size. Now, let's take a look at something. What usually happens is you're looking at your chart, and price could be here, it goes up, and it comes down, and it starts to come back up again. Then maybe it goes down, comes up, and starts to go back down again. And for you trend followers, you would say, oh wow, we have higher lows, so we should probably enter our trade here. So you decide to take a long trade. Now, the question is, what's your position size, and where's your stop loss going to be? Now, a lot of times, most traders, once again, will always use the same position size. So it might result in a 10 pip stop loss if you're trading the foreign exchange, or it might be 50 cents if you're trading the stock market. But what happens is that if you look at the chart and you analyze the chart and use the things that you've learned about price action, there's only one place on this chart that really makes sense to put your stop loss, in my opinion. If you draw a horizontal line here at this low, and you're entering a trade here, what you want to do is you want to use this distance. You want to give price all of that leeway before you stop out. So in this case, you would have a very small position size, because price, instead of going up, could very well, it could do that. And then you've just taken a hit when you really didn't need to. Now, once again, this is my opinion. But to me, when I look at this particular chart, this is the level that makes sense to place your stop. Because we know, based on price action, what can happen. If this is the high and this is the low, then price is either going to stay between here, break out of one side, break out of the other, or break out of all sides, the top and the bottom at some point in time. In other words, price could do that. That is a possibility. So to take a stop somewhere above this line, to me, you're just asking to take an unnecessary hit. Because since price is going to do can only do three things: stay between the lines, exit the bottom, or exit the top. If you enter the trade between the lines, then so long as price stays between the line, you should be in the trade. Only when it exits below this low. Now, a lot of people might say, once again, that no, that's not good, but that's your opinion, and that's okay. But to me, this is what makes sense. So you're looking at price, And for you trend people, you see it's making higher lows, which indicates that the trend is up. And then you decide to enter the trade on the next pullback toward that trend line. You might say, well, what about here? But once again, to me, if you take the highest high and the lowest low, and you draw horizontal lines, these are where your stops are. Because what you're trying to do is you're trying to trade a reversal. Otherwise, you just wait for price to get here and trade the breakout. So, next time you trade, give this a thought. Of course, I've written an indicator that will show you where your stop loss would be and what your position size would be based on this idea. It's basically a dynamic position size calculator. So every time price moves, it tells you if you enter here, here's your position size. And you can either enter a hard stop or it'll look and see where this natural stop would be. I hope this helps. If you have any questions, feel free to post them. You can send them to me either via one of the forums that I post on. You can put them right here on YouTube. And for all the haters, well, here's one more thing you can hate me about. And that's okay. But remember, fellow traders, it's not what you trade, it's how you trade it.